Riches in the Hitches, an RV park investment podcast, takes you behind the scenes of the RV park industry, where park owners, investors, and other industry professionals share their unique journeys, challenges, and triumphs. From transforming raw land into a thriving campground to navigating the ups and downs of managing guests, this podcast uncovers the untold stories of the people who make RV life possible and the strategies behind building a successful investment. Whether you're a park owner seeking insights, an aspiring investor exploring opportunities in outdoor hospitality, an RVer curious about life on the other side of the check-in desk, or just someone who loves hearing entrepreneurial stories, we are excited for you to join us as we find riches in the hitches.
Hey, welcome to Riches in the Hitches. I am Robert Preston, our host today. I am privileged and really excited to have Dylan Stewart on, CEO of Relational Capital. Make sure I get that right. Stewart is the CEO and founder of the company. He has RV parks, mobile home parks, and a relatively good sized portfolio, which I'm really excited to dig in and have Dylan talk us through that and how he got here. So Dylan, welcome to the show.
Yeah, thanks, Robert. Excited to be with you guys here today.
Awesome. So we're actually going to start with our lightning round. I'm going to throw out 3 or 4 quick questions. You know, you've got a bunch of parks, so if you can run through them all, we'd all be impressed, or you can pick a couple of them and just tell us. First question, how did you find your park?
Yeah. So we'll zoom out for a second. So I currently own 7 parks, just under 500 sites. 4 parks are in Texas, and then 3 parks are up in Toledo, Ohio area, and those are mobile home parks. And so we can zoom into one park in particular. This one is Buck Creek RV Park in Abilene, Texas. And this was a park that was actually my first deal that I had bought from a broker. And so every project prior to that, I bought over 13 parks, currently on 7. And every deal prior to that was direct to seller outreach, networking, wholesalers. And this was the first one from a broker. And so it had sat on the market for a while. And the biggest and best first tip is never be afraid to make an offer on a deal, even if you feel like it might not get accepted. And so we made a great offer that was much less than list price. And after it was already on the market for a while, we were able to secure it. And so that's how we came across it.
When you say much less, how much less?
It was about $1 million under what it initially came out to market at. And so we were able to secure it with some seller financing as well. And so
that's my next question. How did you find it?
Yeah. So, you know, of course, as your listeners are aware, there's the deal, there's the debt, and there's the equity, and you start in that order. And so once you find a deal, then you need to see how the majority of the project is going to get closed. And so that's the debt part. And in this scenario, we were able to structure seller financing. I think we had a 15% down payment, so 85% seller finance at like 5% interest, I think it was. We got a 5-year balloon, and I believe it was either 25 or 30-year amortized on the deal. And so we were able to do that. And then on that 15% that we needed from a down payment, we brought in investors to fund the down payment, fund the improvements, fund an acquisition fee. And so it's been a good deal so far.
Okay. And then what's the future of this park?
Yeah, so there is a lot going on in Abilene right now. You know, we have the Air Force Base, we have the colleges, we have plenty of hospitals. There's a lot of energy going on out here as well. We're about 2 hours west of Fort Worth. And so right now, I think they have, they've already been under construction of a $2.4 billion AI plant. And of course, with Trump's new release of what he says is $500 billion Stargate project and everything. And there's a significant amount of movement here with West Texas Energy. And then we have, which I was new to this as well, the largest North America solar farm that's being built here right now, which is 40,000 plus acres and things as well. And then, of course, there's oil and gas. And so it's this interesting market to where I see there is a lot more growth on the horizon, and already been getting calls from even the broker we bought this park from. And he's like, hey, more buyers are wanting in that market. Do you guys want to sell? I'm like, no, not right now. Not right now.
Yeah.
So this park is 50 sites. We take up about 10 acres or so, just under. It's a 36 acre parcel. So right now, what we'll probably do is we'll keep the existing 50 sites that is on public water and septic, and then public electric. We'll keep those as RV. And one new venture that I am going pretty heavily in is where we're beginning to convert some of our RV sites into container homes. And so these are going to be tiny homes inside our RV parks. And so over time, we'll probably convert quite a bit of this park into container home rentals. And then we have another 26 and so acres that we may decide to eventually develop and capitalize, because there's other mobile home parks here as well. And me having a hybrid of both the asset classes, it might be nice to have some sort of development partnership, which I've never done before. So, and actually a book I have here from Dan Sullivan, Who Not How, probably bring in a who knows what they're doing on the development side. And that might be something that we'd look to maximize the vacant land as well.
Excellent. Yeah. Who Not How, one of my favorite books for 2024 that I think I posted out there. Great book. So excellent. That sets us up for a great segue. Like, understanding your market. Abilene is not a market that I know well in Texas. So who is your customer? Who's your customer at Buck Creek, and how is that driving maybe this decision to go into the container home or tiny home component of that?
Yeah, so coming from the MHP side, very familiar with long-term residents, sticky residents, as folks say. And so when I bought this RV park here, I only wanted a long-term RV park. I do not deal with transient hospitality, getaways, campgrounds, things of that nature. They're great, but operations and asset management is hard enough. And so that we didn't want that complexity. A lot of people do very well at it though. And so for us, we have all long-term guests here primarily. We have out of I'd probably say at least 50% of our guests are like multi-year, honestly, 3+ years. Okay. And then, the remaining 50% is probably within that 3 to 12 month range. And then there's probably a smaller percentage that is 3 months or less. And we get a handful of nightlies, but we only have a few sites allocated for that.
Now, is there a particular demographic that you see emerging, or a profession that's emerging that, most of your guests fit in?
Yeah, honestly, a lot of folks in just traditional trades, especially with energy, to where maybe they're welders, maybe they're working on, we have a lot of wind turbines around as well. And then we've had a lot of new big contracts, especially coming into the New Year's, the presidency election. And so there's a lot of energy contracts to where folks are coming out here, whether if they're working on electrical, the solar. We've had a significant amount of electricians come in recently because they're doing a lot at the AI plant. But even before then, and then we have a handful of just retirees, to where it's they have sold their house and they grew up in Abilene, or they live in Abilene, and they just want to live in a fifth wheel or travel trailer.
Yeah, that's great. I mean, so, one of the things that I think people, we love the idea of long-term guests, right? But one of the, I guess the downside or the opposite side of that to be aware of is being tied to a particular trade or project, right? So it doesn't sound like that's a risk for you. How have you mitigated that? Let's say company A has done building their new facility, and then your entire park becomes empty. Is that a risk you're worried about, or how did you think through that?
Yeah, I think the first thing is just taking care of your park, taking care of your people, and then making it known. And so that's where just online presence, to where, of course, you can get into social media and marketing and advertising, and that works. But just simple blocking and tackling of your website, your SEO, your Google, different things, to where it's just you pop up as an option when people are looking in a certain area. And I know that sounds very fundamental, but I think that holds our occupancy healthy just when people are looking for a place to stay. For us, we're still learning and understanding the RV space. And so we're definitely not the most expensive. We're not leveraging a lot of dynamic pricing as occupancy increases, so does the price, based on what occupancy level you're at. And we're kind of keeping it simple. And for us, maybe I'm leaving some money on the table, but I'd rather hold a higher occupancy and at a more competitive rate than try to be 50 to 70% occupied, but be the most expensive in the town or things like that. And so that's it. But then also that's where I am very curious, as we will pivot some of our sites to long-term rentals of having tiny homes, to where we can secure more of those, 12-month plus leases. And then eventually, I'm not saying we'll do it here, but across the portfolio, we may sell off some of the tiny homes and have them be 10-owned homes, and they're just paying lot rent.
Okay. So when you do that, will you be going and moving into or subject to more of the housing type of rules and regulations versus the RV side of that for, I know Texas and every county is a bit different. So this particular county, does that, will you, you know, are you going to be going through an eviction or a trespassing if something goes wrong?
Yeah, so it would be an eviction, right? Because they'd be long-term leases,
Yeah.
right? In that scenario. For us, when it comes to like zoning and conversions, we're doing units under 400 square feet. And so
Okay.
there's still park model, ANSI RV type units to where they will be able to drop them in and not have to worry about any zoning changes or additional permits and regulations there.
Yeah, that's one of the cool things that we, found out early in our investment career as we started buying these things is that if it's less than 400 feet, right, it's ANSI certified or RVI certified, it's still an RV. Even
Yep.
a container-owned park model, well, not a container, it doesn't come in on wheels, but all these park model units, right, that people see, tiny homes, man, that is a powerful tool from an investment perspective to be able to just buy a home, pull it in, set it up, block it, and not have to go through years and years of developing and permitting to create housing. So, man, good on you for thinking through that and being creative and bringing that to the market down there. So I think you might be one of our first guests that, really caters to the energy sector. And I know that's a big component, particularly the West Texas, Oklahoma, Central American stuff. So I'd like to dig in a little bit more and talk about, the marketing side of that or how you go about getting guests. Are you doing anything that's going directly to the businesses themselves that are bringing in there, or is it only to the actual specific guest?
Yeah. So Abilene is a unique market to where there is a lot of energy work that is, happening, and it's driving a lot more guests to this town, especially in the RV parks. But then, the town alone, I think the last time was like 125,000. It's probably closer to 150. There's a lot of developments. There's a lot of expansion going on. And so I feel like it's kind of making a shift from a more of a secondary market to where now it's getting known more on the map, independent of just like, oh, it's this town way out there. And so for me, like I do own another RV park further west in Big Spring, Texas, which that's where Big Spring, Midland, Odessa, you get into the Permian Basin, traditional oil and gas. And to be honest, there is a significant amount of money to make out there. There's lot rents are so much higher, and you can tap into just heavy cash flow during that time period. But I don't desire to keep buying more out there because there's kind of that unsettledness of like, okay, what is going on? Is this a boom? Is this going to be a bust? And I think there's a lot of speculation around that. At least we hear those words, but when you talk to plenty of other owners who have owned out there for a long time, it's like you buy at a good price, you take care of folks, and you kind of go with the wave. But for me, it's like for us, we're trying to pull even closer into the bigger MSAs around DFW, around Waco, San Antonio areas, to where it's like we're a lot more insulated there, and just as we go forward, just for long-term holds, especially.
Yeah. So what's your horizon? Like when you buy a property, you expect to hold it for 5 years, 10, 15, forever? What's your thesis there?
Yeah. Honestly, we're still kind of evolving with that. And I think everybody has, oh, we're buy and hold forever. But it's like, okay, well, why? Does it make sense to maybe sell at some point in time? And I think it comes down to, for one, how did you structure the deal? How did you get your debt? And how did you get your equity? And, depending on those factors, a lot of people, especially in the traditional syndication fund world, they don't make much money until they sell. And so they are incentivized to disposition the property. Other folks, maybe they did structure it to where it's a long-term hold and it's a volume play. It really just depends. I think for me, one metric that I've been looking at recently is return on equity. And so like for me, I'm 25 years old, and it's like right now, I would probably rather have a significant amount of cash rather than cash flow, because for my horizon, if we were to sell an asset, we can then take those funds and recycle it, or step into something bigger, or maybe a different venture altogether. And so a lot of people, cash flow is great, but if you make $50,000 a year, and it's like you can go and make $50,000 a year in cash flow, but you can make $500,000 upon a sale. It's like, well, let's look at it. Would you rather make 10 years of effort in one event, or would you rather go for the next 10 years of effort to make that exact same amount? And of course, you look at taxes and making sure you're properly structured and before you sell, so that you're having to have as minimal burden as possible on the tax side. But I think that's something a lot of people should look at is, okay, well, I think if you can get closer to, hey, if I can have 10 years of effort fast tracked in one event, maybe it is worth selling, because there's always deals out there. And I think a lot of times there's so much opportunity. There's so much opportunity in people. It's like, it's never going anywhere. And I think the more abundant you are, the more your perspective is like, there's enough to go around for everybody, that if you were to have a sale event, there's plenty of opportunity to go and redeploy that.
Yeah.
So it's not very direct, but that's how I feel. That's the honest answer.
I mean, I have that same mental struggle every time I get an offer or LI, and it's always on the property that's doing well. You've probably spent a couple of years turning around, getting fixed, adding sites, building it up. And now it's like hands-free running cash flow. Of course, that's the one that the broker wants. That's the one you get the offer on. You're like, ooh, man, that's a great offer. And it's always that internal battle of do I take the cash now or do I just let this thing run? And I kind of live by there's an old saying out there. It's really hard to go broke making a profit. So the whole bird in the hand versus the bird in the bush philosophy for me probably generally weighs over. So, hey, we jumped right into the RV park side of it, but tell us about
one thing. I'm going to share. I'm going to wind up, and we'll come back to this. But one thing too is, at the end of the day, and this is going to sound so crude, and I'm intending it to be. It's be selfish, right? Focus on what makes the most sense for you and your family, because it can be so tempting in the world of LinkedIn and status and what's your assets under management. And I own 1,000 lots and 2,000 lots. And it's like, so what? Like, you're impressing people that you don't sit around a dinner table with, you don't hang out on the weekend with, and all these things. And it's like, we compare ourselves with people that we truly don't know the truth, but it's like, what happens behind closed doors with your marriage, with your health, with your kids, with your faith, with everything, your peace of mind, your joy. Because at the end of the day, like, if it's in your best interest to maybe take some chips off the table, to spend more time with your family, to travel, to make experiences, like, be selfish, focus on that. Because a lot of times we can keep growing and expanding because it sounds good and it looks cool, and our investors want to give us more money to go and deploy in deals. But it's like, that's in their best interest, because everybody's looking out for themselves. Everybody wants to look out for their best interest, and you need to protect what makes the most sense for you and your family.
Well said. Well said. So who's around your dinner table? Tell us about you. We jumped right into the business side of it. Tell us about you.
Yeah. So I got started in real estate right out of high school in 2017, got into single family wholesaling. I was a byproduct of a weekend webinar or weekend workshop more so, and was doing some local wholesaling in Washington State, where I'm originally from, and then started doing out of state wholesaling in St. Louis, and then had an opportunity. It was God's good timing to buy a small mobile home park, and bought that park. And then a year later went and bought multiple more, went from 22 units to 500 in the 12-month period, and bought in Texas, Minnesota, Ohio. We had that original park in Illinois. And so that's on the business side. We grew and then bought other parks in Texas, and that's it. But on the personal side, life's simple right now. So my wife and I, in May of 2024, we moved from Washington down to Texas to actually be just closer to our current projects, and then closer for future acquisitions as well. And so happily married, coming up on 5 years being married here in September, and we only have a golden retriever, so no kids at this time, and so just a pet. And when we're not working, like, of course I love anything outdoors, whether if it's snowmobiling, snowboarding, which there's not any of that in Texas, unfortunately. That's where Washington's great. Whether if it's dirt biking, hiking, fishing, anything in God's country is great, but that doesn't happen on a daily basis. And so like to get outside, go for walks, like to read. And honestly, like, my wife and I, we talk about what really I think is one of the most important things for what we see as a successful marriage. And we're very new at this anyways, compared to a lot of people, but just being growth minded. Right. And so for us, like, I love growth, whether if it's podcasts, books, learning, mentorship, coaching, things like that, because at the end of the day, it's like, we have one time on earth here. And so it's like, the more that we grow and learn, I think it allows us to show up in the best way possible.
Yeah, certainly no snowmobiling in Texas. We were almost able to do that a couple of weeks ago in Florida. We had a pretty massive snowstorm for Florida, which was like 8 inches, which was crazy.
Yeah.
But yeah, so I mean, that's really impressive. Like at your age, where you're at, what you're doing, again, well done. Kudos to you. How do you, when you were sitting down and figuring out, finishing high school, you're wholesaling, one thing led to the next, but what got you interested in RV parks specifically? Was it chance, or what got you into your first park?
Yeah. Into the first park or the first RV park?
First RV park.
Yeah, I think it was just opportunity at the right time. And I think mobile home parks and RV parks are kind of this little lost cousin that, if you're in one, you're kind of familiar with the other. And so it wasn't when it was at the end of 2020, because we were also wholesaling some RV parks and mobile home parks just as we're prospecting. And so, when we found an opportunity that made sense, it was like, okay, well, like this is a really good deal. And, it was a value add park that we have so much fun with, right? I'll always love those value add deals. And so it was just one of my acquisition guys was cold calling, came across the deal, and I was like, hey, this is a really good price. At that time, it would be our second park in Texas. And so was able to pick it up, and then it was just going from there. And so I will say right now I only own 2 actual RV parks, and then I have 2 other parks that are like hybrids. And that's where I do like these warmer states, to where if you have a mobile home park and you have a vacant site, you can easily have it just be a long-term RV site rather than having to spend all the time and money to fill it with a mobile home.
Yeah, for sure. So, you mentioned you're in like 3 or 4 states right now. What's the plan?
Yeah, 2 right now.
Okay, 2. Ohio and Texas.
Yeah.
But you want to only be in Texas.
Yeah, within probably the next 12 to 18 months, we'll finish up our projects in Toledo, and then we'll sell those, and then probably just focus everything in Texas. And honestly, that's just for simplicity and ease of lifestyle, being a little bit more focused rather than having to fly, drive all over the place, going checking on projects. And I think going back to what makes most sense for your family is being within a 3-hour driving radius. Not that we have to be there every day or every week or every month all together, but it's just, if we need to be, we can.
Okay. So not a market decision, just a lifestyle decision.
Yeah. I mean, and even if we were in a smaller market, I think it would probably still be hyper-focused. Like that's where I recommend anybody who's looking to get started in the space is, if you can go in your backyard, do it. I lived in between Seattle and Tacoma, and so my backyard didn't make sense, and it's at least very close. And I'm sure I could have made some different locations work in Washington, but then you get into landlord laws and things like that. But I think starting within that 5-hour driving radius of where you live for anybody is really good first step.
Cool. Now, how does Relational Capital, your company, fall into this? Is that you, or is that you and partners? And just tell us how that business works.
Yeah. So right now we run pretty lean and mean. And so I'm the only owner of the company. And so then behind me, we have our operations manager who, she oversees any of our site managers and a lot of our construction that we run. And then we work very closely with every one of our site managers at our properties, because every property does have a site manager. And then we have our bookkeeper, we have some VAs, and that's really it. And so I think that was one mistake I made early, is you try to, again, you think it's cool and you want to hire and grow. And so you bring on investor relations and asset management and construction management. And then you have, acquisitions manager. And again, you probably, if it makes sense, then sure. But that is, I think, a fault of a lot of new entrepreneurs, is you try to grow so quickly, not growth financially, but almost like people wise, because you think it's the right thing to do when sometimes it can be a little more methodical.
Yeah. And people are pretty expensive. That's largest line item in most businesses.
Yes.
And then, so do you, if we can ask, do you use investors, or how do you fund? Are people investing into a property, or are they investing into your company?
Yeah. So everything we do on a property level. And so, each acquisition is a single purpose entity. And we've done different structures to where we'll do traditional joint ventures, or we've also recently done a handful of debt that then converts to equity. And so on some recent deals we've done, to where we'll have a first position debt, and then our investors will be secured in second. And then once their loan is paid off, they convert to a minority equity in the deal. And so I think I don't want to say get away with, but, have a little bit more unique structure because we are doing smaller acquisitions, sub 3 million, 5 million typically on something like that, to where folks doing the larger deals, it's a little bit more LP favored on those structures.
Yeah. Awesome. So if someone's listening and they're trying to figure out how to do this, you're putting out a lot of great information. What would be your suggestion on how they could go back and start? Like, where would they go to find any books or education? Where would you send them?
Yeah. My company's name is Relational Capital because relationships are so important. And I think everybody knows what they need to do. Like in reality, we know we need to talk to people. We know we need to look at properties and, probably make some offers. Right. And so, but it's just, we don't do it. And so when you get around people that push you and grow you, whether if it's in Facebook groups, if it's paying to be a part of some mentorship or education, I think that's always a great first step, but put a time frame on it and say, okay, like I'm going to go all in for 30 days. And it doesn't have to be 6 months, 12 months. If it's longer than 30 to 60 days, you're probably consuming too much education and you're getting into analysis process. So get that foundation of education and then just go out and start talking to people, right? Reach out to people in these Facebook groups because that is so valuable, on LinkedIn and other folks who are doing deals, and find a way to provide value to them, whether if it's honestly a lot. And I will say from my experience in RV parks and mobile home parks is most people are go-givers. And if someone owns probably less than 10, probably less than 5 properties, they'll be open to at least maybe having a phone call with you. And so reach out and just be honest, say, hey, I'm looking to get into this space. I'd love to take 15 minutes of your time. I'd love to ask you some questions. And again, this all sounds so cliche, but then start to understand and build a relationship. And then whatever action steps they give you, go out and do it and then come back to them, right? The biggest thing is people, for one, they don't go and do it. And then 2, they don't come back to them and say, hey, you told me to go call every RV park in the town. I did that. Out of the 10, 8 of them hung up. 2 of them said, you suck at phone calls. Now what? Right. And so again, so go and take the action and then give feedback, because at the end of the day, it's like you need relationships, whether if it's a seller, an investor, a mortgage broker. And so I think the quicker that you expand that, the better. But at the end of the day, it's like you only learn when you have time under the bar, so to say. And so the quicker that you fast track jumping in head first, talking to sellers, talking to investors, talking to brokers, you will learn and you will get better for that. And so I know that sounds a little rah-rah and like just jump in head first, but it truly is, because I think anybody who's actually done this business for a while, they will say the quicker that you start, the quicker you figure out. And so it's like, if you can get to that 70% of kind of understanding, that last 30%, you will learn so much quicker in a very short time frame rather than trying to get to 100%, because that might take you 2 years, but you can get to 70% in 2 months and then come up with that last 30% very quickly.
Yeah, the way that I've rephrased that is just fail quickly, right? You will not be good at it the first time. The first phone call, the first meeting with the broker, the first meeting with the lender is going to probably not go well, right? So if you know that, then get it out of the way. Get the first few failures out of the way, so that you will get better at it, right? So fail quickly, fail forward, fail often, get going. Failure is the key to success.
And one thing I'll add to that too, Robert, is like whatever your goal is, share that with people, right? So if your goal is, hey, I need to replace $5,000 a month in income to retire my spouse, or $7,500 to go full time in this, whatever it is on a cash flow or annual basis, say, this is my goal and I want to make this happen as quickly as possible. Can I have some of your time to see how we can accomplish this, right? Because people often don't buy into the story, right? So whatever your story is about what you're trying to do with your family, people like to see how they can help you with that.
What's your goal?
So to be honest, my goal is evolving, right? If you would have asked me that, I'd say, okay, our focus is to continue to buy 500 sites within a 3-hour radius of DFW, build out a very cultured team, very faith-driven, impact-driven, and, have multiple, whether if it's philanthropy, just missions within the local communities that we own. And I would go on that. But I think for me, I've kind of just, we're slowing down a little bit and being a little bit more intentional with our steps of, making sure that sometimes it doesn't always have to be go, go, go and grow, 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 because that's where it can be so tempting in business. And so I think for us, like being okay having simple goals, because I've had a lot of stress and a lot of pain and a lot of mistakes and failures by trying to grow so quickly. And so I think now we're trying to move a little bit slower. And so I think we'll continue to buy probably, at least 4 parks a year within that, 3-hour radius of DFW, and continue to grow the portfolio here. I think for us, like going to continue to focus on the team, building systems, using technology, using automations, and streamlining things as much as possible. And that's going to be it. I think for us, like my wife and I, we have a very big mission, impact-driven heart of what does it look like to just serve the kingdom more, right? And whether if that's in church, in our local communities, starting organizations, or just giving to them, however that looks. And so we're going to be working our best to allocate more and more of our time and resources towards that, I think, as we buy back our time in our business as well.
Man, that's perfect, right? And we pray and wish you the best on that, which actually leads me to a couple of our final wrap-up questions that we ask. One is, what gets you out of bed? What is your why? What's your purpose? What's your cause or philanthropy? What is it that's driving you to push this hard, and also to not push that hard?
Right. That last little bit, that's for sure. Yeah. Honestly, I think, and this sounds cliche, but it's like when you enjoy what you're doing and when you can connect the dots to the steps you're taking every day to move you closer to the ideal outcome for you and your family, it becomes fun and it becomes exciting. And so for me, it's like, I know for us, as we stabilize the portfolio, as we drive occupancy, as we streamline and automate things, like that is going to buy back more time for myself and spend more time with my wife, and to travel more and to have that life of freedom, right? Because like my kind of principle is like change lives, make memories, and live free.
Yeah.
And so for me, it's like, that's my mantra of how do we move closer to that? So what gets me out in the morning is like, hey, let's just make more of that. And let's make a business that thrives and supports that more.
How do you give back?
Yeah. I think for us, just financially, there's definitely a significant amount that, we tithe, as Christians and wanting to donate to the church. One thing I think that, God's really challenging my heart is like, if we are tithing X amount of percentage, like how are we also doing that with our time? Right. Mm-hmm. And so I think that's where I'm feeling very challenged and prompted in that this year. It's like, well, if let's say 10%, right? It's like, well, are we giving 4 hours of our week, let's say, to a cause that we believe in? It's like, I know I'm not, let alone 12 hours, 16 hours a month. Like, I know I'm not. And so I think for me, like giving back monetarily is easy. You can set it, you can forget it. You can be sometimes unemotional about it. But I think giving with your time is something I'm really going to be pushing myself to this year, of just getting out in the local community more, because that's where it's harder to do that.
Okay. And then the last question, in our brand Unhitched, one of the mottos is disconnect to reconnect, right? And continuing to get, like you're saying, we're trying to disconnect from those things that draw us that are maybe not that important. Maybe they are, but they're not the most important, right? Family, friends, God, the creation that he's made. So what is it that you do to disconnect so that you can reconnect to those most important things?
Yeah, that's a really good question. I think first of all, like even before you disconnect, is being ruthless with the things that you're spending time on. And that's where being a growth-minded person, learning how to buy back your time, as Dan Martell says. And when you start with that lens and focus, you can be a lot more critical to where you're spending your time, because it's hard to disconnect if you're doing low-level tasks. It's hard to disconnect when you're always in email, when you're always responding to messages, when you're always answering the phone. And so if you are trying to disconnect, but you are like intentionally sabotaging yourself because you're just doing things that aren't the highest and best use of your time, it's going to be really hard to. And so I think that's the first thing, is be intentional with high leverage activities that move the business forward. And then secondly, for me, of course, like I love walks, getting outside and just letting my mind think. I used to always listen to podcasts and music and things like that. And now I've been a lot more intentional of just going and walking in silence. Of course, I love, and that for me is to pray, to think, and just like be okay in stillness. And, I think a lot of us, we know the right answers. We know how to solve our problems. It's just, we don't get quiet long enough to actually contemplate them and solve them. And so I think the more that we can do that, the better. Of course, I like journaling and just having some time to process my thoughts, because when we can slow down our thoughts to the speed of our hands, we can articulate them a little better. So that's the easy ways. And then of course, like getting outside in nature, like I mentioned earlier, of going out and doing fun, maybe more so adrenaline activities is really nice as well. Awesome. And reading. I love to read. That helps me. That feeds me.
What are you reading right now?
I Think and Grow Rich is on my desk, and then of course the Bible's the daily. But so Think and Grow Rich has been one that like I'd heard for so long, and then I just hadn't read it. So finally this past year I went through it, and I've gone through it a few times since then. And that's another thing, is like focusing on mastery versus overload. Is it's so easy to keep going through books and different things, but it's like, has our life been different became different because of something we've read? And if it hasn't, if we haven't implemented the things through a book or even a podcast, then we've essentially wasted that time.
Yeah, the reread, right? There's a few books that I probably reread every year, and then I'm always adding something to it. But yeah, that's great. Well, Dylan, thank you so much for being on Riches in the Hitches podcast today. How can people find you? How can they connect with you? I guarantee you, from what you're saying, people want to hear from you more. So how can they find you?
Yeah, I've been trying to be more active on LinkedIn, Dylan Stewart, Facebook, Dylan Stewart, and of course, my company, relationalcapital.com, and you'll find me there.
Awesome. Well, thank you, Dylan. Thank you for being on Riches and Hitches, and we'll talk to you again soon.
Thank you, Robert.